Welcome everybody, this is Edgardo, Balentine.
And this is Scott DiGregorio, and welcome to the Real Estate of Tomorrow podcast, where we're going to discuss the rapidly changing landscape of the real estate industry.
And the steps that you need to take today in order to survive tomorrow.
Look, I'm going to give you the perspective of a 25-year veteran, somebody who has been there and done that.
Which is a slime for all fart, okay?
Screw you, man.
Look, I'm going to give you a fresh perspective from somebody that's applying those steps today.
So that basically means you're young and you don't know shit.
All right, let's get this started. Welcome to the Real Estate of Tomorrow podcast. I'm here with my co-host, Scott DiGregorio, and this is Edgardo Balentine. How you doing, man?
I'm doing really good. I'm excited about this episode. I'll tell you why. Because I know way more.
Tell me why. Yes, you do. And this is about reverse mortgages.
Look, it is it is so mind-blowing to me how wildly misunderstood this is. I'm not even going to talk about from the consumer standpoint, which is a big deal, but from the real estate community standpoint.
I wanna lay the ground on this.
Okay.
In this episode, we have a couple of goals. One, what is a reverse mortgage and why is not the devil? Two, okay, how does a reverse mortgage work for the average consumer? And three, how the hell can you buy a house with a reverse mortgage?
I like it. I like it.
So let's go.
Yeah. So look, and that's, that last point is what I was getting to. Like, if you look at opening up new opportunities, or even better, having your eye on emerging opportunities. If you look at the number of people retiring in America today, and you look at what's happened to their finances through COVID and inflation and blah, 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 there are so many people right now that are prime candidates for a reverse mortgage. So, bro, I know we want to do this for the big Q&A kind of format. So why don't you just start firing questions at me and I'll go.
I would put it even further. Like, the excitement for me, and I think the excitement for realtors should be, this is a market that is less worried about the state of the current market, the state of the rates, the prices of the homes. Like, this is a market, like, we've talked in the past about like divorces and things like that, where when the time comes that they need to do a transaction, they need to do a transaction, no matter where the rates are or where the market is or anything. So it's exciting for that reason. But let's get into it. What the hell is a reverse mortgage?
A reverse mortgage is a mortgage that's made to a senior, typically 62 and older. There's exceptions, but typically, where they do not have to make a monthly mortgage payment. Okay, basically the interest just accrues on the mortgage, and that's really it. There's not really.
So just give me a simple example. I have a home. The home is worth $500,000. I'm 70 years old. I don't owe any money on the house. Let's make it super simple. I want to get a reverse mortgage. Go.
Okay. How much you get depends on your age. Okay. So you could probably get at that age at maybe 50% of the value of the property. So you could have $250,000 that could be given to you in a monthly payment, that could be given to you in a line of credit, that could be given to you in a lump sum at closing, however you want to do it. Okay. But let me spin that around differently. Let's say, okay, I'll give you a perfect example.
Please do. Give me a perfect example.
I'm going to do that. So I had an agent that had a buyer. Buyer said, look, I sold my home in, I think it was Arkansas, for cash. And I wanted to move to Florida and buy my dream home. And she said, great. How much money do you have? And she said, $250,000 from the sale of my home in Arkansas. Now, Ed, you and I know you're not buying your dream home, at least not in Southwest Florida, for $250,000. Okay? She sent it to me for a mortgage. This client just had Social Security income, nowhere near enough money to get a mortgage. And frankly, even if I could get one, it would have been wrong to do so.
Right.
But what we were able to do was she was able to buy a $450,000 home, put down $250,000 cash, took out a $200,000 reverse mortgage that she did not have to make payments on. All she was responsible for was taxes and insurance, the same as if she paid cash. And boom, she was able to buy her dream home and not have her cash flow compromised. And that's a happy ending to the story.
Okay, so you can, if you obviously qualify in the age and blah, 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 you can buy a house for, in that case, 40% more than you actually have the cash in your hand and never make a payment?
Absolutely. And I can't say they don't look at it at all, but they largely don't look at income or credit. It's looked at a little, but nothing like a regular loan at all.
So even if the lady qualified for a $200,000 or for a $200,000 house or a $300,000 house, it just almost like immediately doubles the purchasing power.
Absolutely. Absolutely. And again, you have plenty of people here that make $1,500 or $2,500 a month Social Security income. Maybe they're widowed or something of that nature. Even if you got a mortgage, the strain on their finances to do so. Just because somebody can get a mortgage doesn't mean somebody should get a mortgage.
The livability at that time of having. Okay, so the biggest misconception is, all right, somebody like that, they get the house, and they pass away a weekend, and the bank keeps the money, keeps the house.
Not the case. Look, way back in the day, bro, that was the deal, right? Now, the heirs have 6 months to pay off the mortgage, right? They could refinance it. They could sell the home, and
they can sell it.
They could sell it, keep the equity, of course. If they have the means, they can write a check to pay it off. By the way, just like any other mortgage.
Right.
If you have a regular mortgage, what in the business we would call a forward mortgage, if you had a forward mortgage, it would also have to be addressed.
Right, it has to get paid, yeah.
Yeah, and if you sold a home, you would also have to pay that off, and you would also get to keep whatever equity's left. There's literally no difference there. Look, there's one negative, okay? And it has to do with people's viewpoints on inheritance, okay? The negative is, as this mortgage balance grows every month, the amount of equity that you have will be less. I'm not saying your equity is shrinking, because keep in mind, as the mortgage balance is growing, so is the property value. But obviously on a regular mortgage, the balance is decreasing while the property value is going up. In this case, they're both going up. But look, I can't speak for others, okay? But I always tell people this: there's two mindsets towards inheritances. My in-laws are wonderful people. They're going to work their entire lives to make sure that my wife and her brother gets every nickel they possibly can. That's one way. That's not my way. Okay, me personally, I told my kids, you will not have any college debt. I will help you with your first car. I will pay for your wedding. And outside of that, I hope everything works out for you. So, and more people I meet are in my boat than the others. So if you're a person that says, I'm willing to sacrifice my life until the last day on this earth to maximize my inheritance to my loved ones, this is not the product for you. For everybody else, like, there's no way I don't get a reverse mortgage as part of my retirement plan.
Like, I get that, but pushing it forward though, it like beyond just that, there are other less complicated ways to leave something to your kids that's not as illiquid as real estate.
Absolutely.
Because I'm sorry, but real estate as an inheritance can get very murky, right? Like, yeah, the title is easy, but it needs to get sold. Somebody wants to keep the property. There's a lot of sentiment to it, like where you can get insurance, you can get other vehicles, right? That you can leave your kids in a very good position that is not real estate.
Absolutely.
So, okay, so let me ask you. Do you find that the majority of clients that use this, and I mean, this touches the point that you were saying, are people that are just desperate and don't have any other alternative, or this can be a viable retirement plan?
It's so funny. This could be and should be a viable retirement plan. And like
so why isn't it? Why aren't people talking about this shit on TikTok? Like, people are talking about annuities and I'm TikTok, right? People are talking about annuities and life insurance and the universal life plans. Like, why aren't people talking about reverse mortgages? And why do they have such a bad reputation?
Because here's the deal. Back in the day, the bank did take your house. A long time ago. But back in the day, the bank, if you in your example, if you closed on a reverse mortgage and a week later tragically passed away, you sign the house over to the bank. But most reverse mortgages that are done now are called HECMs, a home equity conversion mortgage, which is an FHA product. This was, the government stepped in and said, look, what's going on in this area is wrong. So we're going to create a product that protects our seniors. In fact, in order to get a HECM, you're required to go through a counseling session by a third-party HUD-approved agency to make sure that you understand everything you're getting into. So back in the day, it was terrible. And there are still financial advisors and stuff that are out there that will badmouth the product just simply through ignorance, just through a lack of understanding. The thought process that the only people who would do this is somebody who's destitute and whatnot is absurd. Apple, like the company Apple, is carrying tons of debt. They have assets. Tesla's carrying tons of debt, and they have billions of dollars liquid in the bank. Like, leverage is really how wealthy people build wealth. But this stigma has been attached to reverse mortgages, and it's been misplaced for decades. But it's there, and that's the answer to your question.
Yeah, and something that I tell my clients too is, at the end of the day, like having a ton of equity in your house, it's cool, but it's useless if you don't tap into that equity. And this is a way to tap into that equity in a time where, let's face it, the income is not as high as when it isn't. Another thing that I thought was super cool about reverse mortgages, that it's pretty unique. I don't know about any other vehicle that you can do this, is the different types of ways that you can actually receive the money. Why don't you talk a little bit about that?
Yeah, so let's say you're in a situation where, to make up numbers, you're buying a $500,000 house, and maybe you want to put down $350,000, right? So you only need a $150,000 reverse mortgage, but you qualify for, let's just say, a $250,000 reverse mortgage. That extra $100,000 could be divvied up in one of four ways. Okay, it could be tenured payments, meaning that you literally receive a check every month. Tenured means for life. So as long as you're on this earth, or if you're married, if you pass away, your spouse, as long as you guys are on this earth, you will receive this check every month, guaranteed. Second option is a term where you say, how much could I receive each month if I wanted to receive money for 5 years? Like, I've done scenarios where maybe they had an annuity that was coming due, or an investment that was getting sold or whatnot, and they just needed to bridge the gap for a short period of time. So that's option 2. Option 3 is a lump sum. Figure like a cash out refinance, you literally get money wired into your account. And the fourth option is a line of credit. Okay? Or you could combine those. You could say, okay, I want a payment for 5 years, $50,000 at closing, and then whatever's left over in a line of credit. And the line of credits are super interesting, Ed, because they grow, like the available funds grow, the unused portion of it grows at a rate similar to the interest rate. So let's say your interest rate on a reverse mortgage is 5%, and you have a $100,000 available balance on the line of credit. At the end of year 1, it's 105. At the end of year 2, it's 5% more than that, et cetera, et cetera. So that's a very interesting component of this, where literally as your equity grows, your ability to use it grows as well. But I think it's also important to mention, they're going to lend 35, 45, 55% of the home's equity. There should be no set of circumstances where you end up upside down in this property. But that's probably another concern that people have. I'm sure you've heard that.
What happens if, let's say that's all well and good, right? Like let's say my mom comes to America and she has the money, she puts the money down, like half of the money, she buys the house, and everything is great now, right? Because the market is good, we don't see it crashing, blah, blah, blah. For whatever reason, right? Pandemic, whatever. The market crashes in 10, 15, 20 years, and my mother passes at that point.
And at this point,
the house is worth half of what the mortgage is. And I inherit that. What do I do?
You literally sign a piece of paper and walk away.
Okay. Without any, I don't have to make a payment to anything. Just
so part of the deal with HECM's on an FHA product, there's an insurance piece of it built in. Okay. And if you're in a situation like that, you literally sign a piece of paper. The lending institution sells the home for whatever they could sell it for, and HUD covers the difference between the two from their insurance fund.
So it's it's a real, what they call non-recourse loan.
Absolutely.
That's
Absolutely.
Crazy. So as I think through this, right? If I'm a real estate agent, and please give me your version of this, the way to present this to a client is, instead of just, obviously there is an age requirement to it. So not doing this with like a 30-year-old, but if you see that somebody is in that 62 and up, maybe, you know, the higher the better in this case, correct? And they don't have necessarily all the funds in order to qualify for a house or for what I know the market requires here. The best way to approach it is to go, hey, in the current market conditions, I think it's important for you to look at all the different type of options that we have. One of them being purchasing cash, another one being is looking at different type of financings. Why don't you talk to, you know, my mortgage advisor? And he can lay out a lot of different options. Some of them are a little bit unconventional, but I would definitely ask him about the outside the box financing that you can find. And then that way the real estate agent don't even have to mention the trigger word of reverse mortgages. Obviously, if the realtor want to become more educated on the matter, that's great. But I would at least invite them to get or invite the client to walk into this presentation or this meeting with an open mind of outside the box financing. Anything you would add to what a scripting for that should be?
Yeah, you know, I would actually lean in differently. Okay. I would lean in differently and say, look, one of the things they're going to talk to you about is a reverse mortgage. And I got to tell you, after having spent time with Scott and Ed, I've learned so much that it's amazing to me how misunderstood this is. So if that comes up in the conversation, I don't know, but if it does, I would just encourage you to go into the conversation with an open mind, because this is a product that's really has helped a lot of my clients here in the past. I mean, I think a lot of times, man, we got to just talk about the 800-pound gorilla in the room. And I think the client hearing that it's not like it's a viable, good option from more than one source is a win.
That's good too. Yeah, I mean, if you have the confidence to do it and if you feel strong enough about it, and look, as an agent, I highly encourage you to attend the meeting if you can, and if you know, obviously if the client it's open to it. And look, one of the things that we've done, Scott, and I've done it too, is invite the financial advisor, invite the kids, invite as many people as would be decision makers of sort into the conversation, because at the end of the day, if it makes financial sense, it should make financial sense for everybody that goes into the conversation with good intentions.
Absolutely. So look, if you don't know anything about reverse mortgages, give us a call. Speak to your favorite lender that is familiar with the product. I will tell you this. Reverse mortgages is a product where you need to talk to people who really understood it. Yes. As opposed to somebody who does mortgages and, yeah, I could do a reverse mortgage, I'm sure. Because it's just a different process. The process is different, the paperwork is different, the things you're explaining are different. So make sure you talk to somebody who's a real expert on the subject if you go outside of us.
Guys, reverse mortgages for purchase transactions, that is something that I guarantee you that the majority of the people in your office don't know about. Anybody that's 62 and older might have the opportunity to just immediately double their purchase power simply by opening the conversation to this loan. So don't walk away from this, because you can immediately double your volume by simply knowing that these loans exist. That's it.
End of story. All right, guys, you heard it here first. Real Estate of Tomorrow podcast, the best real estate related podcast out there. Be sure to share it with your friends, your colleagues, and your clients. And tune in 2 weeks, man. I'm Scott DiGregorio.
Edgardo Balentine. See you in 2 weeks.
Take care, guys.
Well, thank you guys for listening. And now it's your turn to implement everything you learned today.
Look, you have a question, you have a topic for a future episode?
Share with us.
Yeah, tell us what you're doing. What are you doing today so you could be successful tomorrow? Send us an email at success@realestateoftomorrow.com.
And don't forget to leave us a review, an honest review.
Screw an honest review. Leave us a 5-star review. And for every 5-star review we get, we're going to send you a badass Real Estate Mean t-shirt.
Those shirts are hilarious.
See ya.